Todd, good to have you here. What should investors know about these ETFs? You have, in some cases, the underlying stocks not actively traded. You have index providers eliminating Russian stocks from their benchmarks. What are the hazards here, maybe opportunities?
Well, this is a highly risky situation. You're right. The underlying stock market in Russia is closed. The ADRs and the London stocks that are behind some of these securities are closed. The ETFs are not allowed to create new shares, which means the price that investors are paying is often going to be different than the reality of the value of the portfolio. You could have a premium, which we've seen in recent days. You could have a notable discount where you're paying much more or much less than what the value of the securities are. We think investors need to be very careful if they're owning this and deciding whether or not it's worth keeping these in their portfolios, because these ETFs could also close. They could be shut down in the near term as well, based on the MSCI decision to reclassify Russia as part of an emerging market and remove from the underlying index that these are behind.
So just to be clear, Todd, if you own a broad market ETF with some of this exposure and holdings, what do you do?
So if you own the iShares Core MSCI Emerging Markets ETF, IEMG, or VWO, which is Vanguard's Emerging Market ETF, your exposure to Russia is about 1% of the overall portfolio. It's much more dominated by China, by Taiwan, by India, by countries that are in much more stable geopolitical situations. So if you own those, you likely shouldn't do anything different because it's a very small part, and the stocks will ultimately get removed, or the ETF might trade a little bit different than the benchmark itself. If you're targeted towards Russia with these single country ETFs, that's where the risk is much greater. But if you're in a broad EM ETF, it's likely something that's going to be negligible impact, and you should own these if for the right reasons and not be making a short-term call.
And if you're in a Russia ETF, it was like one of the best performing markets last year. What if you're holding that?
Well, it's now one of the worst worst performing markets, because what happened in 2021 and what's now in 2022 is not. We have a negative view on Russia ETFs. We think there's concerns about these going forward, especially because the ETF is trading at a notable difference between the net asset value. But investors need to make their own decisions knowing the facts behind the underlying ETFs.